All right, Matt, we're getting the numbers right now, and here's what we've got so far. The company's third quarter adjusted revenue outlook coming in just a bit light. They see $12.9 billion to $13.9 billion. The estimate out there was for $13.28 billion. They also see third quarter EPS of 20 cents. The estimate was for 13 cents, so that at least slightly better than expected for its second quarter revenue. That beating the street's estimates at $12.9 billion. The estimate was for $12.02 billion. We look at adjusted EPS of 13 cents. That's coming in better than expected here for the second quarter. So second quarter looks like that beat the street's estimates here on both the top and bottom line. Intel also saying that they expect a modest second half recovery. I know you're just getting these numbers as well, but Matt, what's your first takeaway from those numbers?
So, I mean, again, certainly, I think when you look at, in particular, the compute number, it looks like that client computing group number came in better than expected. Again, I think that's what was driving strength for them in Q2. When you talk about Q3 being a bit light, I think where the Intel management team really wants to be is in a place where they can give us a guide and come in and beat that guide, which has been a struggle for this company. So I think giving a little bit lower estimate isn't a bad thing. And obviously the stock is reacting nicely to the results.
Yeah, a near 8% pop there for shares of Intel on the back of these latest quarterly results coming in. You were talking earlier about where Intel is. I mean, we're coming off of a quarter where they had the largest quarterly loss. In the previous one, PC sales, as you pointed out, really in decline and a big pain point for Intel. Do the numbers we got today suggest that that's starting to kind of moderate?
Well, I think that what we got today tells us that at least we've seen a bottom, particularly in that PC category. So it's not so much that PC sales are getting better moving forward, but I think certainly Q1 was the low. We worked some inventory out, and now you're starting to see the benefit of that in Q2. And I think for Intel, given their strong share in that space, it's a nice cash generator that they can use in part to allow them to invest in some other interesting areas. And so, yeah, I think it's normalizing. I think it's a good thing.
What are those areas that they will be investing in that could really be a catalyst here for Intel moving forward?
So I think that Intel needs to improve where its execution is in the server CPU space. So that's, again, it's a category where historically they've been dominant. You've seen AMD taking share. You heard Lisa Su talking about higher share in Q2, or their expectation that they will have higher share in Q2. So I think their servers are going to be higher growth than PCs. But then also when you're thinking about new opportunities like AI, I think Intel's been a bit slower to execute in that category. Certainly everyone, to a large extent, is lagging NVIDIA. But if you're able to generate some cash, you're able to get your manufacturing in a better place. If you are doing the manufacturing in-house and you're doing it well, you inherently have a cost advantage. And so that allows you to do some things in terms of pricing, in terms of entering new markets. And so I think that's what Intel's striving, where Intel's striving to be.
Matt, when you think about the semiconductor sector broadly, we have seen heavy subsidies coming through. Obviously, the U.S. really putting out those incentives, Intel taking advantage of them to increase domestic manufacturing. We've seen that happen in Europe as well as China. We got those comments more recently from Commerce Secretary Gina Raimondo, who said that there's going to be a glut of chips, specifically legacy chips, because, well, at least as she said it, of the aggressive subsidies coming through from China. How does that global picture look like for you? And what does that ultimately mean for Intel? Because that has been some of the concerns, that the heavy investments going in. Is there a demand waiting on the other end?
So I think that right now we are seeing a glut, and it's not so much supply as it is demand. So I think what happened in 2021 and 2022 is we certainly did see some spikes in some markets that weren't necessarily sustainable. But at the same time, I think the biggest driver in terms of increased demand for semiconductors was the shift to 5G. And so that's a tech shift. That's not turning back. Now, certainly the sharp decline in handsets, particularly Chinese handsets, was unexpected. But I don't see that as something that's sustainable. I think Chinese handsets will pick up. And on the other side of this kind of macro pressure, I think you have a number of kind of mega trends that are just going to drive more semiconductor demand. And so you've got AI, but beyond AI, you've got EVs and ADAS on the automotive side of things. So both of those drive significant increase in consumption of semis for automotive. You've got AR, VR, if Apple's successful in those efforts. You've got IoT, where you need to create more information for the AI in your data centers. You look at your home or my home. I've got my sprinkler systems run by Rachio that has semiconductor content, and I've got so many Rokus. All those have semiconductor content in it. My washing machine annoys the heck out of my wife because it tells me because it tells us both when it's done with the load. But all of this intelligent device, all these more intelligent devices, adding AI at the edge, that all drives semiconductor content. And so I think when we get a macro recovery, there is going to be significant demand for semiconductor content. I also think that a lot of companies are working China out of a portion of their supply chain to diversify risk. So I don't see a glut from China as necessarily the problem. Rather, I think we get a few years out and just these mega trends are going to drive demand. It's just who can execute around getting good products out, around getting them out at good cost through good manufacturing. And it's that manufacturing side that I think we just need to figure out with Intel.
Yeah, it has been fascinating to see the shifts globally, at least that's happening in semiconductors, and the alliances we're starting to see form in that space. Matt Bryson, Wedbush Securities SVP Equity Research. Good to talk to you today.